This video will discuss managing and reporting prepaid revenue using Alert. The situation in this example project is that an invoice is raised in advance of services provided. This project is a maintenance project that is charged in advance for services provided over a defined period of time. In this case, it is an annual charge. Service revenue will therefore need to be spread evenly over the contract period of maintenance. Alert will always spread revenue from a customer invoice over financial periods based on the service from and to dates. Revenue will be spread based on the number of days in the financial period as a percentage of the number of days between the from and to service dates. This will occur regardless of the earned revenue method setting for the project. The service from and service to dates are recorded in customer quotes and order service lines. And also in customer invoice service revenue allocations. In cases where customer invoices are generated from customer orders, then the customer order service line item service dates are passed to the customer invoice service revenue allocations. Looking at the invoice generated from this customer order, invoices may be generated or manually entered. The customer invoice service revenue allocations form that is accessible for each invoice provides the user with information to assist them in allocating service revenue for an invoice. For example, the revenue allocation level for the project is displayed so that the user knows what columns must have a value entered for Alert to accept the revenue allocation line item. In this case, the revenue allocation level is only at the project level, so a service and an employee is not required to be nominated for the allocation of revenue. Alert will always attempt to update invoice service revenue allocation details from the customer order for generated invoices, including the service from and service to dates. The invoice service revenue allocation details will now be visible in the period revenue adjustments form, where Alert brings together the calculation of revenue for each project. Call up the same project, and looking at the Prepayments tab for this example project, we can see the invoice that has been raised for the project, as well as the invoice service dates, the apply from and the apply to date. These are the dates that the service revenue will be spread over. This tab displays the amount of revenue that is being applied by Alert to this period. Current period being September, and the calculated amount from that invoice that is to be applied to September appears in the calculated amount column. Should the amount of revenue from this invoice that has been calculated as applying to this financial period be less than the invoiced amount, then a balance will be carried forward to future periods as the balance forward. In this case, there is a balance forward. When the financial period is rolled forward in Alert to the next financial period, then this balance forward will be updated as the opening balance. In this case, the invoice was raised in January, 31st of January. Revenue was to be applied from the 1st to the 31st of December for that year. The amount of that invoice line item was $53,688. And as at the current period, being September, the opening balance, being the amount of revenue invoiced but not yet earned for September, was $17,945. Alert has calculated revenue for September 2015 as $4,412.71, leaving an amount of $13,532.33, which will be revenue to be applied to future periods. Alert has calculated the revenue based on the service dates. There is, however, a manual column that allows the user to manually enter an amount of revenue to apply to the current financial period. If revenue has been manually calculated by the user and entered, then it is suggested that details for that calculation be included in the notes field to explain how the revenue was calculated and why it was entered manually. If we now go to the Billings and Revenue tab, we can see how Alert has calculated and spread this revenue out over each financial period. We can also see the balance brought forward and the balance carried forward for each financial period. The carried forward balances represent the dollar value of each revenue invoiced but not yet earned as at the end of each financial period. So as at the end of September 2015, there's still $13,532.33 of revenue that has been invoiced but not yet earned. In each financial period, we can see the revenue that has been applied. The report can now be produced of revenue invoiced but not yet earned by going to the Sales Alert Report, Accruals and Prepayments. Because we are interested in revenue invoiced but not yet earned, we will select Prepayments and look at a summary report. This report now provides us with the unearned revenue, revenue invoiced but not yet earned, for the period of September, for each customer and each project. This is the end of the discussion on prepaid revenue.